What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic, and today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended on Friday, and where price is likely to head Monday and into earnings week. Before we get started, don't forget to check out the link in the description below. I got our link to Rawstocks Discord where I'm hanging out. There's a free 30-day trial right now, a couple more codes left for that. Also, some other ways you can support the channel. A link to a book that we're currently studying in the Rawstocks Discord, and some other information. So let's dive into the chart. If you're looking at Tesla's daily chart, we can see that obviously we've just been selling off like crazy. Using RSI, we are now in an oversold range, but that doesn't mean that we couldn't continue just a little bit deeper, or it doesn't mean we couldn't see a bounce. And then target a RSI divergence and see the low taken, or maybe just this internal bit of liquidity here taken as we set maybe a lower low, and then potentially rally up from there. We could see full capitulation, and we could just dump down below the low of 194. And that's entirely possible because we have earnings this week. And so, if we don't catch a meaningful bounce in the next couple days, then we're probably going to just flush on earnings. So we'll just have to see what happens. Also on the daily chart, you can see our previous week open was at 215. Our previous week low was at 217, and this is from the week prior to the week we're heading into. Or the week prior to last week. So our new weekly open low, or our week low, will be 207.56, and our week high from last week will be a high of 223.49. So that's going to be our new range. But last week we were trading below the previous week low of the week of January that ended in January 12th. So that's very bearish. We are below all the monthly and the weekly lows, currently up just a little bit from the low of last week, which happened on Friday. So we will mark that off on our charts just so we have that. If you're using an indicator that gives that to you, when market opens on Monday, it will refresh that and it'll give us our accurate previous week high and low. So there we go. We'll just mark them off on our charts there. That's going to be previous week high, and this will be previous week low, and those will be accurate. So we'll be looking to see, do we again start to trade below the previous week low, which was last week's? That will be a bearish look if we're below that, and then we could look to target additional liquidity, the low right here of 205.69, and then even potentially the low of 194.07 if we were going to head lower. Okay, also we have our previous week high to target. So if it does look like we're starting to trade up Monday, maybe into Tuesday, we might be looking to target 223.34, give or take. 223.49 is the exact candle high there. If we start trading up, we'll be looking to target that. But we also want to target this candle high here from January 18th, which was Thursday, and our high there is 217.45. So let's put that on the map as well, because that will be our first area that we want to target. That's where we'll see us trading above, this candle that broke down here and continued on the downtrend, right? If we can break that candle, we might see a further reversal. Even if it's shallow, we still could see price continue up. So we closed here, right? If we break that, could see a little bit of pullback and then look to break the previous week high, or maybe even just find rejection there. Also have a fair value gap between that high and the price of 225.45, 225.50. So could target that fair value gap there. Could go even a little bit deeper. We got the previous month low coming in. It's at December. That was December's low right here. So we could target that if we were to really get cooking back up towards like 230. So lots going to depend on how earnings is and how the market responds to that. Now, alternatively, if we open up and we come down and we swipe this low, we could be looking, if it goes deep, we could be looking for it to pop up and then come back down and target the sell side liquidity all the way at the bottom, which is external range, or could just see swipe the lows and then come up and take this high right there at 217. And if we did that, that'd be a nice bullish look. I'd be looking for a fair value gap here on the 1 hour or the 15-minute time frame if there was a nice explosive move back up above 217 and a half. And then I'd be looking for price to potentially come back down into fair value gap if it was there, and then rally up from there. I would say that would be our good look at a reversal happening, where we might then consider whatever the Fibonacci range is, maybe back up to 236, 243, 248. There I'd be looking at the potential of another good short entry. See if we get another move back to the downside. Now if we pop into the 1 hour chart and we look at what the 1 hour chart has. Take off this indicator here. There we go. We'll just use that one for now. I have some other things on the smaller time frame charts that I'm looking at. All right, so we haven't filled this gap fully here, and gap fill would be all the way back up to 220. And so again, that would be a nice, a nice move, breaking that kind of high we were talking about, right? Let's go back to the daily chart. 217.50. All right, so if we look at the 1 hour chart, we also have the high of this candle here, which happened in pre-market. So if we count the pre-market high, we got 219.27. Either way, I'd like to see us show some kind of change of character to the upside if we do want to target higher highs. On the 1 hour time frame, we also have this fair value gap here that we're currently sitting in. So if that decides to hold price and reject, then we could be looking again to target lower lows. We also have this fair value gap here that might pull price in. So if we break through this, 214, 213 and a half, 214, if we break out of that, we might target the 216 all the way up to 217 and a half. If we break out of that, then we'll be targeting 219.27. So a couple different things on the 1 hour chart you could be watching. If you're taking, swing trades for the week, again, be careful because we got earnings coming up. And we have not seen a confirmed change of character yet. Now we do have highs here from when we were coming down, right? Both of these highs would count if we can get a change of character here, right? And that means that price comes up above it, comes back down. There's a fair value gap in between here, so we'd be looking for price to come back down to 210 and a half. Maybe even 210.75 all the way down to 210, 210.10 or some 210.15. Anyways, into that fair value gap after a structure shift on the 1 hour, then that'd be a good long entry to target some of these additional liquidity targets. Now, if you were looking at taking a trade like that, you're going to run it as a 2-to-1, and you're going to set your stop back right below this old low. Okay, and you can see that if we target this this target here, which is from the daily chart without the pre-market, it's 2.27 risk reward. If you target the higher, it's 2.86. Either way, your stop is right back below. And we only want to take this trade if you're using smart money concepts. If we see the change of character happen right here first by taking that 213 level and then coming back to test that fair value gap. That's going to be your low risk entry for the long trade to take these highs here. Now, if we do see price come back down and not hold support and take this low, we got an order block on the 1 hour time frame. We'd be looking for a similar thing, and what we'd be looking for there is some structure to occur that could give us indication, right? And that would be looking like something like that for a long entry there. So we'll just be waiting to see. Basically, at this point in time, kind of looking for market to find some kind of support. The fact that we traded right down to this 1 hour order block almost perfectly and then found support there, that order block could hold us. But again, if we give up this previous week low, we could take that order block out And then we'd be looking at something like this, right? Coming back up and then taking it again. And then we could just fade out all the way back down to that 195 kind of area that we were talking about. So just be watching to see what price does early, and really be watching early in the week, and really be watching that previous week low that came in on Friday. If we adjust it down a little bit, there we go, 207.55 on the dot. So let's drop into the 15-minute chart. On the 15-minute chart, you saw we had a nice displacement candle to the upside. We ran on the high. We immediately ran back down on the low. Typically we call that a turtle soup setup using ICT concepts. Run on high, run on low, and then you'd be expecting price to run back up on the high, and then even higher at that point. Wouldn't be surprised if we saw a little bit of rollback, but then really want to see this low here of 210.71 hold for price to continue up, maybe up to this order block. And again, we have our different different targets, on the different time frames. Also, just note that there's that gap fill that happened between Tuesday and Wednesday. So that hasn't been all the way filled. We've traded into it. This gap's been filled. This gap's been filled here. Then above that, have a small order block at 236. Right? And we got lots of targets to the upside. Our targets to the downside are starting to run out. I don't think we can see them all here, but we have not taken this low exactly to the wick. We also, there we go, at 205.21. If you blow that up and look at it, there's also a nice a big order block here. And you can see the top of that order block is at 207.90, which we came down into, and we found support there. So could go deeper into that order block. But it also could just hold that level as support. And again, that's right around where these lows are. But that was one displacement candle. Ended up providing a inverse fair value gap there, which held price. And now we've traded back to it. And so we'll just be watching again to see if that holds or if we break down below that point. After that, sell side targets 197.85. Right, the lows here 193.80. And then beyond that, it's no man's land. If we were to get all the way down there, we're looking at, the potential of running all the way down to, the 160s, if price just completely capitulates. Again, a lot riding on earnings, on the earnings call, how the market likes it, what Elon says, right? All that kind of stuff. Then if we drop down, I'm going to skip the 5-minute. If we drop down into the 1-minute chart today, or from Friday's price action, a couple things you can see. You can see the London high here, the London low here. You can see that when we opened up, we immediately delivered to the London high at that point in time. We swiped the high, came back down. What you get here is a Smart Money Concepts reversal, okay, where we came down, we pop back up, optimal trade entry, right? If we're using our tool, we set the stop at the previous high or around, right? We can target the 2-to-1, which would be here at that kind of first take or that second take profit. We can also target the 3-to-1, which is at the next take profit level, or the negative 0.62 on the fib extension, or we can target the entire full symmetrical swing, which is nearly a 4-to-1, and you can see that hits, also delivers on liquidity here, also delivers below the London low right there. So lots of different ways you can be using time and price and structure to develop that trade. And if you didn't catch that kind of initial entry, we also get a fair value gap in here. This is inside the time macro that we like to take trades. So you get this fair value gap here, and we get the drop down return into fair value gap. And again, if you're running your, let's just say we take the consequent encroachment and we're looking for price to deliver on an old low. Okay, we can set our stop loss at 2-to-1. And you can see it's right about the old high, and price delivers down to that exactly. And so again, two different setups about in the same price. right? You get your fib level, but that fib level came before we saw a confirmed change of character. And then we also get a change of character. And then if you didn't catch this fair value gap here and you were waiting for this change of character to occur, depending on which candles you're using for the confirmation there, we also got one more fair value gap, which was a little bit tighter, but we see it right there. Okay, we saw price come down, pop back up, fair value gap, right? Same kind of deal. Try to grab that consequent encroachment, run it on the old low. Okay, and then we can set our stop loss at a 2-to-1, or right here we might put it right above the wick, and then move our take profit just a little bit deeper, where you still get the 2-to-1, and you can see that price delivered, right down to that 2-to-1 mark, which is very common for Tesla to be able to hit those 2-to-1s, right? And then ultimately delivering on London low. So 3 different opportunities to take short setups there, depending on what you like and what kind of confirmation you're waiting for. Right? And then you see price deliver to that London low. And then there's the ability to take a potential long setup, because now we've taken London high and London low. And then this right here shows price is not willing to go lower. You can also see RSI hits its oversold mark. We see displacement happen here. Okay, we see a change of character here. If we're waiting for our change of character, there's no real fair value gap here. And then we get a fair value gap here. And here is 208.67 up to the low of 208.74. So it's kind of a small fair value gap, but it's there. And if you marked it, there it is. Okay, and then we get our return to fair value gap. And we'll use our long entry tool to see what that trade would have looked like. So if you were targeting if you ran your stop all the way at previous low, then you'd have to run your take profit based on that. So let's see what a 2-to-1 would have been. 2-to-1 would have been right there. And you can see very clearly that the stop never gets triggered, and price ends up hitting that mark and exceeding it all the way back up to the order block. But we're running, the same kind of trades, the 2-to-1s. There was no optimal trade entry in there. If you looked at the Fibonacci levels and we went low to high, we only got back to equilibrium. We did not get back into optimal trade entry. And so you'd be taking that one in the fair value gap. There's 2 different returns to it. You can catch the early entry here, or you can wait, right? And there's no guarantee we're going to return, but in this case we did. We got the return to, and you can then take the ride up. Right, the return to this fair value gap and this equilibrium is also based on this swing high, which this swing high had not occurred when we were back down here, right, looking for that first fair value gap that's found in that price range. And so you can see here also using those highs. In this case, we never returned to equilibrium or to optimal trade entry. So at this point, taking that fair value gap back at 1225, that does not meet all the criteria, being that price is still at a premium price. So got to understand those kind of things too. When you take the trade, doesn't mean it's not going to work out. But and if you were waiting for optimal trade entry, you would have never got it. But you would have seen this high come in, right? And then we end up back to equilibrium. Then at that point, based on this price range, we are neutralized at equilibrium. So that's a better entry right there. Then we see displacement, fair value gap, displacement as we run up. And then ultimately we ran on our targets. You can see too, using the Fibonacci tool, that we do hit symmetrical swing on that trade as well. So, if you're using that, again, if you're on multiple contracts or you're taking, multiple shares and you're trading this way, you can run your first, right? If you get the entry here, you can run your first close order back at the 0. You can then scale out at the -2.7, the -6.2, and then see if you can run a runner to the -1. So hopefully it's helpful. I appreciate all the support. We just showed how you can use smart money concepts to take multiple trades in both directions, regardless of whether price is moving up or down. There are trade setups all over the place. So again, I hope this has been helpful. Good luck on the trading this week. Don't forget, earnings is coming up, and it's gonna be a volatile week. I have a feeling. So hope you guys make some money, and we'll see you guys on the next one.